Hi there, Serial Trader here. Just want to do a few things with the major US indices, and we'll start off with kind of a deep dive on the larger time frame. Now with the chart of SPX here, this is basically starting from the 2009 low, the beginning of this big bull market we've been in. And I'm going to go through a few scenarios that I'm looking at here. So this is scenario number one, and that's where we have a 1, 2, then we have a 1, 2, 3, 4, 5 extended third wave, and that was the 2018 peak, September I believe, and then we just had this large ABC down for 4, and that's that large fourth wave, and now we're working this final fifth wave up. We've made new highs. And then when that completes, we'll have some sort of larger pullback on this major time frame. And just a few things to point out here. We continue to see bearish divergence on the weekly MACD moving averages. And we continue to see bearish divergence very clearly on the weekly RSI. So higher highs in price, but continually making lower highs on basically these momentum indicators. So that's certainly something you'd look for signs of an impending significant top on this time frame, which is the weekly time frame. So this is the scenario one, and this would imply that whenever we're finished this most recent wave up, could have some significant downside in a correction, possibly to as low as the previous fourth wave of one lesser degree. So that would be around 1800 or so, and that would be if it was just a correction and not something more significant, or a more significant correction down to this previous low, which would be the 2009 low. Now that does seem very far away, but you never know, right? Okay, so that's number one. Number two, and I think this is a somewhat interesting scenario. Okay, you have the 1, 2, and then we have an extended third, 1, 2, 3, 4, 5. That's your extended wave 3, big wave 3. And now we're working possibly an expanding triangle wave 4. Okay, so A down, B up to new high, C down to new low, D up to new high, and then E down to a new low for that larger fourth wave, and then another impulse wave up in wave 5. Now expanding triangles, they're a fairly rare pattern, but they are a legitimate Elliott wave pattern. And so far we have the makings of this expanding triangle, where we just have a series of lower lows and higher highs within this expanding range. And this would imply obviously a big once we're done this D wave, a big move down in wave E to finish that large wave 4. So this still implies a large move down, although with the difference that upon completion of that, we'd be looking for another big impulse wave to the upside. And then we have this other scenario, probably the most bullish scenario I can think of here, or I can come up with, and that's where we have 1, 2, 1, 2, 3, 4, 5, extended 3. This was just our ABC down for 4, and now we're working the fifth wave, but we've just done, or almost done, perhaps it's just initial wave 1 of 5. Then we'll need a wave 2 pullback, although to a higher low above the December low, and then up in 3, 4, 5 for 5, and maybe 4,000 or higher for that upward target. Now this is kind of the most bullish scenario I can come up with of the three, but even this one still suggests some sort of corrective setback here once we peak out in that first wave. All right, and obviously the other wave count, the expanded flat scenario that was almost invalidated, has now been invalidated since we took out the September 2018 high. So I haven't shown that anymore. That's now void, invalidated. But I think we'll just look at one more, not big picture, but maybe just shorter term here. as far as more relevant for a trade. And let me just clear off the drawing tools here, and we'll go down to the daily. Well, at least start with the daily chart. And actually, we'll just go shorter term than that. Well, no, first off, so we got overbought on the daily RSI, and now we finally come off the overbought condition. So finally giving up a bit here. Daily RSI got how high here? As high as 73. Yeah, on a closing basis, 73 was the highest we got. And there was still a bit of a bearish divergence here on the MACD moving averages, although there was not one on RSI. RSI just simply got overbought, and now coming off that condition. We're below that daily T line, but what I really want to go in here is, say, the 15-minute price chart, and just from a shorter term trading perspective, maybe go through something here. Okay, so it does look like we have some sort of 5-wave structure to the downside in progress, and I'll just give kind of a possible scenario. Maybe this is 1, 2, 3, 4, 5 of 3. Maybe we're working that fourth wave, possibly already done at today's high, and then one more push down in 5 for that initial impulse wave down. Okay, and I'll just drop the degree down here. Obviously, this is a short time frame. Well, make it minute. And also, nice extended third wave that subdivides into its own 5-wave structure. So let's see here. 1, 2, 3, 4, 5 of 3. That's one lesser degree. Okay. And then, yes, this would be suggesting perhaps one more push down in wave 5 for possibly what would be a larger impulse wave down. And let me just get these labels up there. And that'd be one higher degree still, so maybe a minor degree wave 1 down, right? Or A. And then you'd have to have a retrace and then further down. And I'll just get the A wave labels out as well. So that'd be 1 or A, 2 or B, 3 or C. I'll make that the same degree there as well, minor. All right, so if we get this, we would need some sort of corrective move up, a larger degree one. So something like this. And let me just move these over there a bit and drop this down. Yeah, so something like that would look typical, and we just don't have enough development yet to kind of anticipate this, but so far it does look like we have, at least on the shorter term time frame, this 15-minute chart, impulsive decline doesn't quite appear complete just yet. Looks like it needs one more leg down to count as complete, and then we'd be looking for that larger corrective bounce up. And then if we get this and we do set a lower high below this high that we had here at I think it was 29.54 or so. If we can set a lower high below that and ideally do your typical fib retracement, and I'll just guess where we get down to here. Say we come up to the 618 or in between the 618 and the 786, something like that. Make a lower high, start turning back down. That could be a potential short trade entry. But it's not quite there yet. You'd have to see more pattern development yet to try and short this market, as it has been quite punishing. Every time it looks like it's going to sell off, it just ends up, making a new high and not having any downside follow through. Although the seemingly unlimited upside, it will not be unlimited. It will come to an end at some point and actually lead to a decent decline. And this could be the kickoff for it. But right now, not enough data here for me to really want to do an entry, but certainly watching it to see if it shapes up. So that's really all I want to highlight there, just those three big picture scenarios. This one's fairly bearish, where we put in a major top soon, or we already have, and then we come down in a big correction. This one, while still bearish, that it needs to come down in an E wave below the December lows. Overall, big picture, a bullish continuation up to new highs after that. And then this one where we just do a partial retrace of this move off the December low, and then continue even higher thereafter. So those are kind of the three main scenarios I'm watching. And then, of course, just this short-term outlook, possibly working a downside trade setup, but just not there yet. All right, so that's kind of what I wanted to show as far as the wave count goes. Now, on the Thinkorswim candlestick chart, we do have a pretty strong daily sell signal, and we have a bearish engulfing candlestick as of yesterday. So that was Wednesday. And then engulfed 1, 2, 3, 4, 5. Yes, it engulfed 5 prior daily candles, real bodies. So that is a strong bearish engulfing candlestick. So the more prior candlesticks you engulf, the stronger the signal. Certainly 5 candles being engulfed on the daily, that is a strong sell signal. Then we close below the T-line. That also adds to its strength. And now we stayed below the T-line today. Did kind of a doji day, but still closed below the T-line and still a negative day. And obviously, coming off that overbought condition on the oscillator, nowhere near oversold just yet. And also not even here where we weren't oversold, but this is kind of an area that we bounced from before on the oscillator, and we're not even at that point yet. So more downside short term still seems likely. And would it really be so unreasonable to at least come down and touch the 50-day simple moving average? I don't think so. But we shall see. And so that's what I'm looking at on the daily. The week is not done yet. But looking at the weekly candlestick here, not a particular reversal candlestick or sell signal yet. Although we'll see what tomorrow brings. Tomorrow could change this candlestick considerably if we get down lower and close lower. Could potentially have a, well, let's see. Could it be a bearish engulfing? So we closed the previous week at 29.39.88. Did we open slightly above that? Yes, we did. We opened at 29.40.58. So if we do have some downside tomorrow and close near the lows, and more importantly, close below the open of last week, that would give us a weekly bearish engulfing and a decent sell signal, as it would engulf at least 2 prior weeks there. But we don't know yet. We'll see what tomorrow's action brings on a closing basis. But something to watch. But definitely on a daily sell signal there at least. That is more clear at this point. All right, that's SPX. Now the Dow Jones Industrial Average, interesting. So I didn't do the wave count on the Dow because I don't care to show it as much. But the wave count on the Dow is potentially still intact for this being a wave 1 down, ABC for A, ABC for B, and then a 5 wave up for C of that expanded flat wave 2. Because we have so far made a lower high below the all-time high back in 2018. So the Dow looking a little different here than SPX, at least as far as the wave count goes, but similar implications. And just looking at the Dow as far as the candlesticks go, because I don't want to get too far into the wave pattern, because it's not my focus here. The Dow definitely did a bearish engulfing candlestick as well. And we engulfed, let's see here, looks like 4 prior real bodies. So another strong sell signal as well here on the Dow. And closed below the T-line. And today certainly confirmation, more negative trading, and further closing below the T-line. 3 T-line crossing below the T-line. We were overbought in the oscillator, coming off the overbought condition, nowhere near oversold. So the Dow certainly looks like it has some more short-term downside, at least, in it as well. And on the weekly candle for the Dow, we'll see if there's any differences here. No, not really. Okay, so let's see where this week closed. That last week closed at 26,543. Where do we open here? 26,559. All right, so we are currently working a bearish engulfing weekly candlestick on the Dow. So as long as we close reasonably low tomorrow, at least below the open of this candle, which was at 26,510 that previous week, we'll have a weekly bearish engulfing candlestick and a decent sell signal on that time frame. So that's something to keep our eyes on. And that's the Dow for now. And if we go look at the NASDAQ composite, we also have now the NASDAQ's more in line with the S&P that we made a new all-time high intraday and closing. So I would say its wave count is more in line with the S&P. But we still have a daily bearish engulfing candlestick on the NASDAQ. That was yesterday. Close below the T-line. Today, further weakness. Another close below the T-line. So certainly the NASDAQ appears to be in at least a short-term bearish mode at the moment as well. And weekly, anything here? So I believe weekly we'll have to have some downside tomorrow and a weak close to potentially get a weekly bearish engulfing on the NASDAQ, similar to the S&P. So we'll have to watch that. All right, so that's the NASDAQ. Now the VIX. VIX had a bullish engulfing candlestick yesterday, engulfing at least a couple prior candles there. Some continuation today, although a fairly big rejection from the intraday high, which was at 1592. Now, as far as the VIX goes, I'd like to see a breakout above these previous resistance levels. So the first one being 1785, and that one before it was 1833. So if we get above those two levels and close below them, if we get above those two levels and close above them, that would actually signal the VIX is trending up, and that's obviously a bearish condition for the broader market. But we're not there yet on the VIX, so I'm watching this one carefully. And anything on the weekly VIX that we're currently working here. Now again, the week's not done. We'll have to see what tomorrow brings, but not really. But again, we'll see what tomorrow's close brings as far as new data. All right, so that's the VIX. Now on the VIX VVIX tool, we do have a sell signal once again, although previous sell signals haven't presented very much follow through, but that could certainly change. So we had a little divergence here between VVIX and VIX, and that's where VIX made a slightly lower high, VVIX made a slightly higher high. We got well above this red moving average on VVIX, and then SPX broke well below its blue moving average for a confirmed sell signal. So as long as we stay below this blue moving average on SPX, which is currently at 2934, we are on a sell signal according to this tool. Okay, that's pretty much it for this video. So basically, just to summarize, there's some new scenarios as far as the big picture wave count goes. On a shorter term basis, potentially a bearish trade forming here, but not enough information on that shorter term wave count to make an entry yet. And that's where I'll leave the video off for now. All right, Serial Trader signing off.